Hey guys, happy Monday. Brad Niccum, Nest Mortgage Group here. I hope you all had a great weekend, and I hope you're all ready for Christmas and have all that Christmas shopping done. I'm excited to say my wife and I are completely finished, and we are stoked about that. But truly, I do hope you all have a great Merry Christmas, a great holidays together with your family. All right, let's start off with the big elephant in the room. Everybody is excited about the fact that interest rates have came down a little bit. It is nice to see rates out of the eights. In a lot of cases, it's nice to see them get below 7, depending on your deal and depending on the loan type and credit score. But it is nice to see rates actually starting to come down a little bit. We do get another inflation report on Friday, PPE. It's another report that shows wholesale inflation. Fingers crossed that it continues to decline and we see rates just slowly come down. If you have had a customer get pre-approved over the last 90 days and they haven't found a house, you definitely want to have them reach out to their lender, see what their rates are today. It may have increased their buying power a little bit. And if they have already found a house and they've locked in with their lender, a lock means you lock in to remove the risk of interest rates going up, but it also, in a lot of cases, means you removed that benefit if rates come down. So if they've already locked in, just go back to reiterate that rates are coming down and they'll be able to refinance in the future if they can't renegotiate that rate. I did see an article this morning that was interesting. I'll put a link in the notes below. And it's about how lawmakers are starting to look to block the FHFA's announcement of loan changes that came around in May of 2023. You remember there was a lot of hoopla about how you'd have a worse interest rate if you had a better credit score, and you may have a better interest rate if you had a lower credit score. It didn't really work out like they were saying, as we were explaining to everybody. But in some cases, updated fees were higher, some were lower in differing loan amounts. They do not represent the pure decrease for high-risk borrowers or a pure increase for low-risk borrowers, though. Many borrowers with high credit scores and large down payments did see some fees decrease or remain the same. And the target elimination for upfront fees for borrowers with lower incomes, not lower credit scores, were primarily supported on a lot of the products. And higher fees did come out on second homes and cash out refis. Well, part of that rule was also postponed, and that was the part about debt to income ratios. And it was going to add another loan level price adjustment, which would have made the interest rate higher if you had a higher debt to income ratio. That one was postponed to August and then postponed again. So let's see if the lawmakers can actually get together on something and kind of block these changes to bring them back to normal. And maybe we won't ever see that increase in rate on higher debt to income ratios. So fingers crossed on that one too. And I want to talk about another quick issue that you may not know about, and that's a thing called trigger leads. It's actually another thing that lawmakers are looking at making illegal or making a lot of changes in the rules. And trigger leads happen every time we pull a credit report. So when a person calls to get pre-approved and we pull that 3-score 3-merge mortgage credit report, the credit bureaus now take the information that we pulled their credit and they sell that to hundreds of people, letting them know that, hey, this customer is getting pre-approved for a mortgage. You may want to call them. And after the person is done talking to me on the phone, their pre-approval, in some cases, the people will get hundreds, no exaggeration, of phone calls from mortgage companies that are trying to, bring that business from me over to them, or kind of just trick them and make them think they're talking to their original lender. It's really difficult if the customer's been referred, a couple of mortgage people to talk to, and there's 3 of us or 2 of us that have done a pre-approval, and now they have 100 more calls. There is a way for everybody to opt out of these trigger leads. I've put the link in the body of this email, so you can forward that to your customer and let them know. It is something that I explain to the customer as well, so they can opt out of that as well and not be bombarded with tons of calls. And this not only happens with mortgages, but all types of credit. And even when you go to register a car at the BMV sells that information as well. So it's a great way to opt out of being bothered by a bunch of leads. So again, I want to everybody have a happy holidays. We're still a 24-hour underwriting time, 24 hours or less, including conditions. Closing loans in less than 25 days, all loan types. So if you've got somebody that needs to close fast, give us a call. I want to say 24 hours a day, but I do sleep at night. But 7 days a week for pre-approvals. Takes about an hour to get that pre-approval done, and I do answer my phone whenever you call. So if you have a question about how to get your customer pre-approved quickly or any of the information in this video, give me a call, 317-538-9825. Happy holidays, and talk to you all soon. Thanks.